Welcome to Module 4, Section 5, where I will talk about paper trading, or you may also know this as virtual trading.
One of the things that you'll quickly run across, especially if you're new to the markets, is a thing called paper trading, where it's just a way of practicing. You can look at this as simulation trading or virtual trading. When I first started out, doing it on pencil and paper was pretty much the only way you could do things. There were some pretty crude software applications available, but not like what we have today. With the advent of software, we have some great tools at our disposal that we didn't have a long time ago, or even a few years ago. The idea behind paper trading is that you can practice under real-time conditions without using real money. And you can practice this many times until you feel confident. And then when you get to the point where you have consistent confidence in what you're doing, then that's when you go ahead and try it with real money. Some people don't like this idea. They think paper trading is bad because nothing can replace using real money. And that's one of the drawbacks that I'll talk about here in just a minute. But the idea is to understand the concept. You're trying out something new. You're not really sure how it will work. So you just want to draw it out on paper or on a computer just to see how things go. Anytime I'm learning a new strategy or testing an old strategy to see if there's a better way of implementing it, a lot of times I'll actually write this out on paper myself. I diagram it out. I have pictures and arrows going back and forth because we need to understand the concept of what we're doing. That's a real useful tool of paper trading, is just for learning and understanding. Then we can use paper trading to practice. So what is paper trading? And I pretty much have gone through that already. It's also called pretend trading, mock trading, virtual trading. You can come up with any kind of name that you want. It's any time that you are trading without using real money. One of the things that can be very helpful is you're always testing out new strategies. You enjoy being involved in the markets. You like the opportunities that are available to you. So you have your basket of strategies that you use, but maybe you try out some different strategies from time to time. You're not using real money, but you're just trying to understand how they work. That can be a really useful tool. In some strategies, you'll say, wow, this just doesn't fit my style, or I just don't see the benefit of this strategy versus what I'm already doing. So you can make some decisions either to implement things in what you're currently doing or discard other strategies. There are so many different strategies available to you that you can tailor them more to your personality and to things that you find easier to implement. The problem is learning new strategies and methods can be complicated. The way that I do this is I first make sure I understand the basic concept. And then I practice that concept using real prices. Then, when I get a basic idea of how that will behave, then I start to back test that idea. I actually go back anywhere from a month to 2 months to years to even decades, where I'll go back and see how would this strategy have performed in the past. Then, what I'll do is I do forward testing. I take it from today and then I move forward, so I can check it out under real-time conditions. When we're backtesting, we can do 20 years of backtesting in just a few minutes. When we're forward testing it, we have to do it under real-time conditions. And we're in different moods. The days are different. The weather is different. The market is different. What's happening in the world is different. And so that can change things. We don't want to be so isolated that we don't allow for the different variables that can influence our positions. And then I just practice that strategy until I feel comfortable with it, until I'm getting consistent success. And then I might be willing to implement that using real money. Another problem is focusing on the winners while ignoring the losers. We have a tendency to do that. When I first started out, I would meet with a friend about this. I was interested in the stock market, but my friend was interested in the futures market. And he would tell me how he made $28,000 in sugar. It's like, okay, well, that sounds pretty cool. What my friend didn't tell me is the $50,000 in paper losses that he had in all the other trades. Yeah, he had a $28,000 gain in one market, but $50,000 worth of losses in other markets. Now, again, that was not using real money. It was just paper trading. But my friend was focusing on just the success and what you can do. And we kind of, well, that wouldn't have worked out and I wouldn't have done that anyway. We can pretty much talk ourselves into anything if we try hard enough. We can rationalize things very easily. Not only do we do that with ourselves, but we can have other people do that to us also. The solution is to use virtual trading software for accountability. There are platforms out there. I go over a couple of different platforms that are available. One is Thinkorswim, TOS, and some of you watching this are probably already users of that software. And another software is a thing called Tastyworks. Now, you may also have software available to you through your brokerage account. I'm just throwing these names out there, not because they're the best, they're just what I use. If you're comfortable with what you use now, stick with that. There's something to be said for familiarity. Yes, we need to learn things, but we need to use what we're comfortable with, especially when we're trying something new. It's one thing to learn how to drive. It's another thing to learn how to drive in a car that you've never driven before. So now you have two learning curves that you're trying to overcome. The idea here is use what you're comfortable with, and then you can start using other software along the way, and then possibly use both or gravitate from one over to the other. When I'm using software, I call this virtual trading. We're doing everything as though it was real. Think of it like a flight simulator. It's like you're really flying an airplane. Everything is real. Everything is the same. All the conditions are what they would be in real life. The only thing that's different is you're not using real money. And we're using this as a learning tool. So there is very powerful free software. The two software packages that I mentioned, Thinkorswim or Tastyworks, you have to set up an account. Thinkorswim is through TD Ameritrade, and Tastyworks is through an outfit called Tasty Trade, where you do have to set up an account with them in order to use the software. You don't necessarily have to fund these accounts, but you do have to set up accounts. And these can be real monster programs. They have a pretty high learning curve. I use both. Some of you may find this overwhelming because there is a lot to learn. Decisions are made in real time without using real money. That's the key, and that's the big difference. It's just as though you were using real money, but you're not. That's how things have changed. I would write this out in pencil, and pencils have erasers. I would print out books of different strategies and different things that I would have done. And those that I wouldn't have done so well on, I'm like, okay, I wouldn't have done that. Or another mistake that people make is they use hindsight as though it is foresight. So you're thinking, well, at that time, this is what I would have done, knowing what I know now. That can be a real mistake because you're not using a real genuine environment at that point. This virtual trading can be very great for learning and for accountability since it keeps track of winners and losers. One of the things that I mentioned that people need to overcome sometimes is they don't have a lot of time to invest in the markets or they don't really understand the markets. The third reason is they don't have a lot of money. Well, if you can set it up using this different software, this keeps a track record of what you're doing. And these are under real-time conditions. And let's say you don't have any money. You can go to somebody who does have money and say, these are my results for the last 6 months or the last year or the last 5 years or however long you want to use to evaluate yourself. They can look that over knowing that there's objectivity in these results. These aren't doctored. These aren't played with. They may be more inclined to work with you. And then you come up with some kind of an arrangement between you where you might split the profits 50-50 or 80-20 or whatever agreement you decide upon. Some of the drawbacks are you can't replace using real money. There does come a time when birds need to step out of the nest. There is a time when pilots have to really fly an airplane. There is a time when investors really have to jump in with real money. Over the years in the classes that I teach, I would teach this method and then people would start practicing and then they would just treat it like monopoly money. They didn't really give it the respect that it deserves. It's like, oh yeah, I've got $1,000 going here and $1,000 going there. That was completely the wrong way to approach this exercise. You have to have respect for what we're trying to do and not treating it as though it were some kind of a game.
This concludes Module 4, Section 5, and I will pick up with things again in Section 6.